Hey guys, so in today's video, I'm going to be doing an in-depth analysis of Shire PLC. They are a pharmaceutical company. They have the symbol SHPG. And if you're new to this channel, I make videos on the stock market and investing, so consider subscribing and let's get right into the video. So Shire has drugs that treat several different things. Their franchises are hematology, genetic diseases, immunology, neurosciences, internal medicine, oncology, and ophthalmology. I will now go more into the different segments of their business. So the first segment and the largest segment of their business is hematology, which is 27% of their total sales, and it grew 1% last quarter. Genetic diseases is second at 20% of their total sales, and it grew 2% last quarter. Immunology is 19% of their total sales, and it grew 18% last quarter. Neurosciences is 18% of their total sales, and it was down 3% in the last quarter. However, they were negatively affected by Vyvanse destocking, so if you factor this out, it was about flat, maybe up a little bit over the last quarter. Internal medicine is 13% of their total sales and grew 15% last quarter. Oncology is 2% of their total sales, and it grew 18% last quarter. And then ophthalmology is 2% of their total sales, and it is a new segment of their business, so there is no growth comparison. Here is a more in-depth breakdown of all of their products and the sales and growth from those. I'm not going to read over all of it because it would take quite some time, and I think it is more important just to look at the overall groupings and their growth. But if you are interested in looking at all of the products, just pause it here and go over all of those. Shire had a very strong second quarter 2017 with product sales at $3.6 billion, which is an increase of 55% year over year. They delivered non-GAAP diluted earnings per ADS of 3.73, which is an increase of 10% year over year. They had a combined product sales that grew 7%, and they continued to advance their late-stage clinical portfolio. They also had $400 million in cost synergies from their Bexalta purchase. This is above what they guided for, which was $300 million. Their non-GAAP EBITDA margin was 43%, and they managed an $880 million reduction in non-GAAP net debt, which is great to see that they are reducing their debt, and they are on track to meet their 2 to 3 times non-GAAP net debt over non-GAAP EBITDA target by the end of 2017. And then they also completed 2 in-licensing business development opportunities. To continue this strong performance, Shire has several key priorities for 2017. These are commercial execution and new product launches, further integration, pipeline progression, optimize their portfolio and strengthen focus, and to pay down their debt. I will now look at Shire's growth in Q2 of 2017. Q2 2017 was a great quarter for growth for Shire. Their addition of Bexalta franchises led to product sales of $3.6 billion, which was 55% growth. And then on a pro forma combined basis, their total product sales were 7% higher year over year, with legacy Shire franchises delivering 7% growth and legacy Bexalta franchises growing 8%. Their non-GAAP diluted earnings per ADS was 10% growth, and then their net cash provided by operating activities grew 100% to $1.223 billion. Here is a more in-depth breakdown of Shire's growth. Their product sales were up 55%, their royalties and other revenues were up 44%, and this led to their total revenue being up 54%. Their non-GAAP combined R&D and SG&A was up 32%, and then their non-GAAP EBITDA was up 58%. Their non-GAAP EBITDA margin grew. They had growth in their non-GAAP diluted EPS, as well as a 100% growth in their net cash provided by operating activities. So as you can see, like I said before, very strong growth in Q2 2017. Here is a similar slide comparing half 1 2017 to half 1 2016. As you can see, product sales are up 77%. Their gross margin did suffer, falling from 83% to 77%. Their EBITDA margin also fell by 1% from half 1 2016 to half 1 2017. But they are working on growing their non-GAAP EBITDA margin, so I think that an expansion in this will be beneficial for them in the future. I will now look at future growth prospects for Shire PLC. So the main area of future growth for Shire is, of course, their strong pipeline. They currently have 7 phase 1 trials 12 phase 2 trials, 14 phase 3 trials, 5 drugs in registration, and 5 drugs that were recently approved. All of this is very strong and will likely lead to great future growth for Shire. Management also thinks that there are 8 key late-stage clinical programs that all have the potential to generate several $100 million in peak sales. And so these 8 drugs will likely lead to very strong growth for Shire. It is great to see so many strong growth opportunities for Shire in the future. Shire also had quite a few very key pipeline progressions in the second quarter of 2017. They had quite a few new drug launches, as well as quite a few clinical and business developments. Many of these pipeline progressions will lead to strong future earnings for Shire. Another strong area for growth for Shire in the future is cost synergies from their Baxalta acquisition. In the first year, they delivered cost synergies that were $400 million, which was $100 million greater than their target of $300 million, and they are confident in their ability to generate $700 million in cost synergies by year 3. They also had some strong revenue synergies, like combined commercial organizations, which allowed Shire to more quickly and effectively launch their new products across the globe. They had 80 plus international product launches planned for 2017. Shire is also expecting to grow their EBITDA margin, which is great to see because it means that they will have more cash to spend on whatever they want, even if they don't grow revenue. So this is definitely good to see. As you can see, since Q3 of 2016, their EBITDA margin has grown quite a bit. It did peak in Q1 of 2017 at 44%, but was only down 1% into Q2 2017. So I think that they will definitely be able to get their EBITDA margin back up into the high 40s. I will now go into how Shire is using the cash that they generate. In the second quarter of 2017, they generated a little over $1.2 billion in cash from their operating activities, and they used $200 million on CapEx. They used $20 million on upfront payments for licensed products, and this left them with a little over $1 billion in free cash flow. They used this to pay down almost $1 billion in debt, pay $235 million in dividends, and then they got $58 million from other investing and financing, and this left them with a net cash outflow of $105 million. So this is all what I consider to be good uses of their cash in the second quarter of 2017. And here is their plan for using their cash in 2018. So they're going to invest in innovation and support their core franchises, which of course makes sense. They're also going to reduce their leverage, so this is continuing to pay down their debt, which I definitely agree with. It will make the company safer, and it will reduce their interest expenses in the future. They're going to continue paying their dividend, and then with extra money, they are going to either focus on licensing and bolt-on opportunities, or they're considering share buybacks. I really hope they do some share buybacks because their shares are ridiculously cheap right now. I'm going to go into valuation in a minute, but I think share buybacks would be a great use of their capital right now. I will now go into the headwinds and tailwinds that Shire will face in the future. So they have quite a few tailwinds. They are going to likely deliver continued growth from their existing products. And then they also have important additional geographical launches of existing products. So this means that the products they've already developed and already worked on are going to be launched in other countries. So that will deliver strong revenue for them. And then they also have strong contributions from their late stage pipeline and quite a few near-term product launches. All of these will deliver strong future growth. And then their revenue headwinds are launches of generic drugs that will compete with theirs. And so this will definitely negatively affect their revenue, but I think that they will still have quite a few new products, and their existing products will still be able to generate strong revenue, even though there are some generics that will be launched soon. I will now look at the valuation of Shire PLC. Here is the data from Morningstar. They currently have a forward price to earnings of 8.7 and a price to book of 1.4. This is very, very cheap. And I have been unable to figure out why Shire is so cheap. The stock seems to respond very weirdly to fundamental events. So they beat top line and bottom line earnings, and then they revised their revenue guidance down, but their earnings guidance up. So those two kind of cancel each other out. And their stock went down like 6 or 7% in the days following earnings. So that's kind of weird. I didn't expect that to happen, especially on a stock that's not overvalued. Sometimes you'll see overvalued stocks where people just sell the news, but this isn't really the case with Shire. And then they also recently did go down 4% on news that their CFO is going to be leaving the company at the end of the year. This is slightly justified because it's one of their key members leaving. However, he's doing it at the end of the year, so they have more than enough time to find a replacement. And so 4% seems like a bit of an overreaction. So I'm thinking that all of these overreactions will allow them to grow in price quite significantly in the future because they have been unfairly oversold. So I think all of this makes Shire a great stock to buy now. So thank you for watching this video. Leave a comment down below with your opinions on Shire. And also consider subscribing. I make videos on the stock market and investing, so if you're interested in that, you might like some of my other videos. And if you enjoyed this video, leave a like down below.